I know there's a lot of talk right now about us going into a recession. People are seeing the stock market crash, mortgage rates drop, interest rates drop. The Federal Reserve is printing money because the government has done something where they're telling people that you don't have to pay your bills.
As the economy stalls, Goldman Sachs predicts unemployment claims will spike to more than 2 million this week. And lawmakers are negotiating plans for a $1 trillion economic relief package, which would include small business loans, corporate bailouts, and direct payments to millions of Americans.
Hey, you guys, I'm back today on Money News Management, and today I want to talk to you about this stimulus relief bill. Most people know this bill as the $1,200 check bill or the, oh my God, they're going to pay my student loans back bill. And no matter what you call it, it's the same 880-page relief bill for the virus that's currently plaguing our nation. And with so many people being told to stay home and not being able to go to work, and the first of the month coming up and people not being able to pay their bills, the government was forced to step in and try to do something to avoid a total economic crash. I know a lot of people don't know what that means, and that's why I spend all of my time reading 880-page PDFs of government jargon so you guys don't have to. So with all that being said, make sure you subscribe to this channel because I'm here to share with you the individual parts of this bill that may affect you directly. And I have the link to the PDF in the description below in case anyone else wants to read it and get an understanding of what's going on for themselves. So there are so many things that goes into this bill. That's why so many people have different stories about it. And the list could really go on for a very long time, including things like checks for everybody and $500 extra for a kid to the increase of payments that unemployment will actually give you. You remembering to smash the like button on this video so that it'll show it to someone else. And all of these other things, and you're like, how does this affect me? So of course, in 880 pages, I'm sure you can imagine that they split a lot of this stuff up. So I'm gonna talk on two parts of the mortgage, and that's in regards to if you own a home or if you're renting. So when it comes to owning a home, you have something called a mortgage. And when you pay this mortgage, you're paying it to some form of a lender. Well, in order for you to get payment from the government or this stimulus relief bill, your lender has to be a federal agency. Now, there are a lot of banks that are actually backed by things like this. So all you have to do is call your lender and figure out if this applies to them. And with all this going on, trust me, they'll already know what you're calling about and they'll have that information ready and you can ask them how this pertains to you. So there's something called a single family home. And I'm sure some of you have heard of things like duplexes or fourplexes, and those are called 1 to 4 style residencies. Anything over that, 5 and plus, are usually considered commercial real estate, such as apartment complexes. So a lot of people don't realize this, but your apartment complex actually has to pay bills too. And that's why renters have to pay them so they can pay for their loan. So there's two parts of this bill, and I'm not going to talk much on the commercial side. I'm going to talk more for the 1 to 4 style residencies. I will talk more about the 5+ in the renters portion of this video because that also is still pertinent to people who don't own a home and they're just renting out of an apartment. How does this affect you? So to start all this off, the only way that you qualify for any of this stuff in the stimulus bill is if your loan type is federally backed. If you have a loan style of seller finance or bond for deed, then you do not qualify for these programs. Now, according to this bill, if you live in a 1 to 4 style residency, you don't have to pay your bills. And the way that you go about this, and I'm just going off of what this says, is that you have to go and affirm it to your lender. So basically what they're saying is if you want to stop paying your bills, call your lender and tell them that you cannot do it because of the virus. That doesn't mean you get to just not pay your bills ever again. There are programs that have been set up that I will talk about later in this video that you got to make sure that you figure out which one works for you. And remember, these aren't times that we've experienced before. I mean, we've had situations where a bad thing happens and we deal with it, but where a lot of the nation is stuck inside their homes and being told that they can't go to work. Yeah, this is a lot different for the government.
Yeah, I couldn't buy no toilet paper the other day. Guess I gotta pay my mortgage.
I mean, if you want to try that with your lender and see if it works, but that's not exactly what I mean. What I'm referring to is if you've been told that you cannot go to work, that you are not an emergency worker, and you haven't gotten one of those fancy letters from the governor saying that you're allowed to be out after a certain time, then you have been affected by this virus. Because if you can afford to pay your bills, pay your bills. But there are a lot of people who are being affected by this, and a lot of people don't know. If an entire complex cannot pay their bills, that means the owner of that complex cannot pay his loan, meaning he qualifies for this program, meaning you qualify for this program. And I know that's a lot more. That's why the renter section will be a different part of this video, because I want to explain a little bit more on how that works. For the people who apply for this, the program is actually when you apply for something called forbearance. Forbearance is literally a term that means you're going through something. So a lot of people who've heard of the term forbearance have been dealing with things like student loans. And yes, this bill also addresses how that works. Forbearance is a term that's usually used for people when it comes to loan forgiveness. So when you apply for forbearance on your mortgage, then you'll have 120 days of no mortgage payments. That's about 4 months. So at this point, I'm pretty sure you're all wondering, well, does that mean I just don't have to pay my mortgage for April? No, you can't just not pay your bills, because even with the courts closing and there being this nationwide, you cannot evict anybody, you still can be evicted once all of this is over for not doing these steps properly. So please do pay your bills, or at least start the documentation process. Email your complex. Email whoever you need to email to start a paper trail. Please pay your bills on time until you have a written confirmation that you have been approved for this program. This program is not some holy grail savior that is gonna pay you for not paying your bills if it activates on the 15th and you didn't pay on the 1st. Banks are told to send out letters to the 3 major credit bureaus that you are not having to pay your bills. So it won't actually affect your credit. It'll actually show that you're still paying your bills during that time. And if you're worried about how that'll affect you doing things like refinancing and getting other mortgages or any other types of loans, since the banks are sending letters to your creditors saying you're still paying and it's not affecting your credit score, when you go to refinance or apply for another loan, it will show up that you're still up to date on your payments. Now, this program, once again, only applies to renters if their complex applies for forbearance. Now, I know that might sound scary or really freak you out, but understand that all that has to happen is that people in your complex email whoever to tell them that they cannot pay their rent or that they're going through something. And what that means is that the complex will have the needed documentation to apply for this process. Please keep in mind that according to this bill, no residency can charge late fees during times like these. So if you can pay something, but not everything, that, they cannot charge you a late fee on your balance, but they can still continue that balance. So if you decide just not to pay before they can apply for forbearance, then you still have to pay that bill when all of this is over. So make sure you communicate the amount that you can pay to your residency, even if it's not the whole thing, because remember, they still have bills to pay as well. There are 3 types of programs that you can apply for this, and this mostly applies to the 1 through 4 style residencies, but if for some reason you're a landlord watching this and you own an apartment complex, then this applies to you as well. So the 3 types of payment methods are lump sum, installment, and the adding method. Now, the lump sum is basically saying that you don't have to pay bills at all, no worry about anything, and then once all of this is over, you have to pay the full thing in one lump sum. And the reason I wouldn't really do that is because if I couldn't afford that now, like if I can't afford to pay, an extra month without working, how am I going to be able to pay 4 months without working when I only started working for 1 month? The next program, which is the installments, is exactly what it sounds like. You pay in installments. So once your mortgage payments start to kick back in, then basically they'll tack on a fraction of the price from each of those months that you miss. I mean, for example, if you pay $1,000 a month and you miss 4 months, and basically what they'll do is just make you pay like $1,100 or maybe $1,200 a month until the debt is actually paid off. Now, this is one that I think would work for a lot of people, but once again, do your own research. I don't know what a lot of your bank accounts look like, so figure out which program works for you. So the final method is the adding method, which basically states that the months that you miss will just be added on to the end of your contract. So if you're paying a mortgage and you have 20 years left on it, if you miss 4 months, then now you just owe 20 years and 4 months. Now, if you're a landlord, I don't think this is a good option for you. Now, this is just my opinion, but in reality, once they've moved out and they've started paying somewhere else, they're not going to either be able to pay you or they're not going to want to pay you. And with all that being said, make sure you subscribe to the channel, because with everything going on in the world with this virus and us being stuck at home, you want to make sure that you know how to manage your money.